value investors with me. Names very well known back home. Guy Spear, Mohnish Pabrai and Raamdeo Agarawal. You can never catch them in one frame except when they're attending the Berkshire Hathaway annual general meeting in Omaha. Okay. Are we done with the photo ops? Guys, great to have you here. Mr. Agarwal, this morning is quite exciting.
Yes, I had a nice sleep and now we are all set to get all the gyan which is going to flow here.
All the gyan, set for all the gyan?
Yeah, absolutely. This is my 21st year here.
Yeah.
And just feels like yesterday.
Between the three of you, this is good. It's like 60 years, right?
Yeah.
Of presence right here.
But
60 plus.
let's keep that between us.
Yes, we
And
will.
we have learned so little.
Yeah.
I mean, that is, I have learned so little. I still feel I'm in, starting up.
No, but Samir Arora, who's also here, and I've given him a call to come and join you guys right now in this panel. He was talking about, how he might say the same things each year, perhaps might word the same concept differently, but it's a repeat value which is really high.
Yeah, absolutely. It's the repeat every year, getting the same ideas back into the brain in case they fell out. And Mohnish was just telling us, so Raamdeo and I, we missed a couple of years. And I think I started coming 2 years before Mohnish, but then when Mohnish started coming, he has not missed a year, and I have to confess that I missed a couple of years. He never ceases to remind me of that. So.
Indian dedication.
The thing is, what I think about the Berkshire meetings is it's like you've been driving for a year and your windshield is really gunky. So this is just a giant dose of Windex.
So when did it all begin? I mean, let's just kind of go back, in the time wheel. When did it begin for all of you? When did you
95.
start?
95.
But
I
what
heard
got
about,
you to
No. First
come
thing is,
here?
I saw annual reports. First physical copy of annual report I saw in 94. Then I realized I don't know anything of the investing. And then I collected all of them, that 20 years, 65 to 95, read all of them. And then I said, it is absolutely important that I must go to Omaha.
Okay.
And next day I came, at that point of time, without internet, without cell phone.
And there were like some 7,000 people at that
No,
time.
it was much smaller,
Much
maybe 3,000
smaller.
4,000.
Oh, okay.
I think Mr. Manjar used to wait with us for the gates to open.
Okay.
And I in Borsheim, I remember in the evening, they used to make him sit with a chair under the tree. And there we would all line up with a dollar bill or something, wherever you want to take a signature. He will do a nice photograph and he will even talk to you and give you a nice signature.
But I got you one signature last year.
Yes.
I got you one signature last year.
So that was a
That
great
was a
experience
big
that
thing for you.
program. Now it has become like a huge-
Extravaganza,
Yeah.
absolutely. When did it begin
Yeah,
for you?
so for
Mohnish?
me, I accidentally heard about Warren in 94.
Okay.
And that was when the first couple of biographies on him came out. And when I read the first one, just a light bulb went off. So I actually was not in finance. I have no MBA. I just did a 180. And I said, this is the path. And it's been great since then.
Guy?
For me, I did have an MBA. I was working on Wall Street, but I was on the worst part of Wall Street you could possibly be. I remember the walk that I would take to the bookshop where I picked up a copy of The Intelligent Investor, and then a light bulb went on in my head. And I think that I must have been at the same meeting that you were, Raamdeo. It was the meeting where they had the first baby Berkshire Bees. They were doing the issuance for
The
500 million.
Orpheum.
It was just after the Orpheum
Yeah.
Theatre, and that meeting, it's in my book. I was going to the toilet, and who comes out of the toilet but Warren Buffett? And he looks at me, and he didn't know who I was, and he says, I always get a little nervous before these things, smiled at me and moved on. And I sort of felt like I died and went to heaven. I couldn't believe, and I still don't believe. I mean, he's walking around the floor right now,
That's
is
right.
how he's just a happy human. And it's hard to believe that somebody who's so wealthy can be so normal.
Yeah, actually he was right here and we were sending some visuals back home and I overheard him say, I'm moving, it's okay, I'm moving. He has this childlike nature, attitude about himself, which is so endearing. But really, now that you guys are here, and it's been, more than 60 years of presence put together, what are you hoping from today's meeting?
Well, I think, again, it's just every time it's, first of all, crystallizes all the old concepts, and they just have so much wisdom between them. And there's always kind of new things that they say. Last year, for example, he talked about Amazon and Google and so on, how they have negative working capital and so on. So you're always picking up stuff from Warren and Charlie.
What is it that you are likely to pick up from his increased interest, ever increasing interest actually in Apple?
Yeah, I mean, it was very hard for me last year because there's a concept of drinking too much of the Kool-Aid. And there are many things that I didn't do because I just said, well, Warren's not doing it, so I'm not going to do it. So I kind of shut out technology. And then I discovered last year that he'd actually opened up to technology. And I think that the ability, the flexibility of his mind to realize what is going on in the world and to become a part of it, his mind's more flexible than mine in a certain way. So yeah, I think that it would be interesting to get his insights as to why, let's say, Apple and not Amazon or not Google, for example, which are also extraordinary companies.
But you know, he's defended his interest in Apple by saying that it's actually a consumer tech company. I mean, I agree, Guy, that you know that largely he's steering away from technology. But as I see Apple as a big consumer story, and I think that's where his interest may be coming from because he's bigger on the consumption theme.
Looks like, I mean, he's always been fascinated by the consumer behavior, and he says that in his house, all the grandchildren, everybody has, he's still yet to be converted.
An Apple iPhone.
Yeah.
But
so
you know, one thing you got to do to calibrate Warren is that he has a disadvantage versus all the rest of us, and the disadvantage is the size of the asset. So, if you have several hundred billion to deploy, you have to deploy it in large chunks. And so, the interesting thing with the investing business is, the smaller the amount of capital, the greater your advantage. And so with Warren, I think it's better not to look at his stock picks and then try to glean stuff from them because he's in a different universe where he's only got like 40 options, for example.
Sure.
The average investor has thousands of options.
Yeah.
And so this is an interesting business where the small guy has an advantage over the big guy. And that's a huge advantage.
No, but I want to come back to the point because you were talking about the fact that you don't get the whole logic behind this investment.
It's not so much that I don't get the whole logic, it's that I haven't even thought my way through it. Because my idea was, if it's a piece of something you hold in your hand, tomorrow, like the BlackBerry, it can be disintermediated. And the machine I use today might not be the machine I use tomorrow. I think he's seen some things about Apple that show that that's not the case with Apple. And
Competitive advantage, perhaps?
yeah, all sorts of, and I don't understand this, but for example, the Apple Store and all the ways in which they tie in, it's the center of a whole ecosystem. And that ecosystem has grown up in the last 10 years. And I'm so busy trying to find nets, and I'm so busy studying the Warren Buffett of 20 years ago and not adjusting the way he's adjusting.
Well, one thing to keep in mind is what Charlie said about the Apple bet. And he said that it's not a cinch. And so the thing is, they made many investments in the past where it was a total no-brainer, that they were going to make money and there was no way they could lose. Apple is probably a good bet, but it's nothing like, Geico when it was going under, or Coca-Cola at the time they bought it, and all those earlier, or See's Candy and so on. So at this point, with the size of the capital, if you can get a bet like Apple, that's pretty good. But the rest of us actually have a broader, better universe, which is great.
Yeah. There's an example of why we come to the meeting. So it's just to hear Charlie Munger say, Apple, it's not a cinch. And then we go away and we figure it out and figure out what it means. And there's so much. It's not a cinch. 4 words is all we need,
But it's so simple. He has laid out. If in investing, if you don't understand, don't do it. So if I don't understand Apple, I don't have to buy it. It's that simple. Both the old guys, they understand very well. Let them buy it and make a lot of money.
You know what's interesting is ever since he's bought it, now it's really the last mile to the $1 trillion market cap club. Isn't that fascinating? $1 trillion.
Yeah,
That's
and
a new
also
now.
the thing is, the important thing for Berkshire and Warren is what they do with the excess capital. And Apple, in a very aggressive way, is returning the capital. So unlike many other tech companies who look at putting it somewhere else, the capital's coming back, which in the end gives him some protection on the downside.
There's a great LGBTQ thing going on here. So Warren dated Gina Rometty for a while, but then he decided that he wanted to get married with Tim Cook.
Okay.
Okay. But tell me something. Talking about the cash on his books, because that's going to be the key highlight of the discussion that will happen. $116 billion to the T. It's just growing every year. It's just.
So you extrapolate into 5 years without deal, I think it will be $500 billion of cash itself.
Exactly.
So, I mean, now with this, even Apple is now oozing out cash into Berkshire balance sheet.
Yeah.
So I think one of the things we have to be watching for in this meeting is the how he want. I mean, has he got any new ideas about disposing of? Does he want about all the five FANG companies? You know, or I mean, even the valuation techniques. You know, like for last 2-3 years, he has given bond versus stocks. I mean, that's what is driving the markets right now. Does he have some further thinking about it? Because he's the guy who opens up new vistas in thinking about the valuations. So.
No, Mr. Agrawal, that's an interesting point. Why hasn't he bought Amazon? I mean, he's clearly a fan of Jeff Bezos.
Well, I think out of all these, the FANGs, Apple is the easiest because if you look at the multiple, you can simply see it's a low double-digit multiple.
Yeah.
And Amazon may be cheaper, but it's not obvious. And you have to do a lot more kind of peeling of the onion, if you will. And also, Amazon's business is a little more complicated to get your arms around. I think Apple's business has a huge recurring component. So all of us who are addicted to the iPhone, we don't really care if Samsung has better features, right? So it's really about the App Store and iTunes and all the back-end stuff. And so the recurring revenue stream they have on the existing devices is a really powerful mode. Yeah.
And it's quite sticky actually in terms of revenue flow.
You know, the other thing about Amazon, I feel like Apple's business model has evolved in a more slow way. Amazon is just moving so fast, and in fact, the fact that he hasn't bought Amazon makes me feel better. I have a friend, Nick Sleep, who talked to me about Amazon 7 years ago, or about 10,000% ago. And the fact that Warren didn't get it either makes me feel a little bit better. It makes me realize that
Me too.
Yes, exactly. So.
Okay, sorry.
Yeah, I would just say that the United States has some incredible strengths, and when we have people like Jeff Bezos or people like Elon Musk who have made, in Elon's case, he's made this their home. I mean, this country has some incredible strengths, and Amazon is a just great example of that. So I'm just really delighted that it's an American company, and it has a really bright future. Same with Apple, a bright future for a long time.
It takes a real Indian to say that India's just getting started. He's so busy talking about the United States.
You read my mind. Anyways,
India is just waking up. And I don't know if I've said this publicly, but I really got a tangible, this time in India, first of all, the whole Real Estate Regulatory Act, it's a whole new concept to me. And there's a sense that, Mohnish is a great American patriot as well, but I feel like that there's a sense with the Indians that I speak to now, enormous problems. But there's this confidence that India will solve its problems, whereas 10 years ago, the conversations would be, India's got enormous problems, I don't know if we're ever going to solve them. Now we know they're going to solve them. It's a very exciting time to be Indian, actually.
I just need to move the mic here, and would you want to continue with what Guy had to say?
Yeah, I mean, I agree with him that the next decade is going to be very exciting for India with the real estate solved, and I mean, with $2.5 trillion, $2,000 per capita, you are headed for say $5,000, $6,000, $7,000. I mean, predictably 2x or 3x to per capita GDP. The kind of discretionary spend which is going to build, and all the corporates which are going to participate in that discretionary spend. I think it's there are very few in stock markets. You get very few predictable trends. Like last we saw was Y2K, which gave birth to Indian tech, so-called. And now it's all about the e-commerce and all. So like that, I think birth of India as a third large new economy. I think it is almost bound. It is there. I mean, you cannot say anything for 100% sure, but in next 10 years, it is going to be one large, thing coming up.
My only question, sir, is when is Mr. Buffett coming to India?
How does it matter?
But he should.
He should.
In China, he invested now in Israel as well.
But it is for Indian corporate world or India as a whole to give that opportunity. He said very clearly that in insurance, which he understands very well.
That's true.
So you have to give that opportunity where it is more than 51%. And we have gone up to 49%, from 24 to 49. I hope at some point of time in the next 3-4 years, it will cross 49%.
So 3 sectors come to my mind where he can potentially invest in India. One, of course, the generic pharma opportunity that he sees, right? That's why he bought into Teva. Then aviation, because he's looking at buying a big airline company with, most people are expecting that would be in the United States. And the third opportunity is, of course, insurance.
Yeah, I think all these sectors, especially look at sectors like insurance, it is so early for India. I think one statistic I read is that less than 500,000 Indians are paying more than $1,500 a year in personal income taxes. there is no doubt that if you go fast forward 10 years or 20 years, that number is going to change dramatically. And so, when you look at housing, you look at insurance, you look at healthcare, you're at such a low base in all of these areas that it's a huge run. It'll have its bumps along the road, but I think it's a multi-decade huge run.
Yeah. But shouldn't he look outside of the United States? To
Well,
deploy that money?
Mr. Buffett will be on a plane in 10 minutes if Tanvir, you give him a deal. If you can help him put 20 billion to work, he's going to be on a plane tomorrow. So send him a deal. He'll be there.
You need to